Hi, thank you for the introduction. And for the opportunity. I'm very happy and excited to share our story with you all. Let me give you a little background of myself and why I'm here and what our project is all about. My name is Kerem Yusenmez, and I'm the current president and CEO of Metallum Resources. It's a relatively new company listed on the TSX, Toronto Stock Exchange, under the symbol MZN. Myself, I'm a geological engineer with more than 20 years of experience in this sector in all stages of exploration, mine development, as well as production in Canada. We have also highly experienced board and the team that have done this before, and we built mines, we discovered and expanded and built companies as well. I wanted to talk about a little bit of this cover slide where you see some of the infrastructure we have. It's a past producing mine in the 90s. But what I want to show here is not many projects have that kind of infrastructure. There's tailings dam, there's polishing pond, settlement pond, major infrastructure. On the right top side, you see the water treatment plant is in operation. I'll show you where this is located, a very, very good, easy location in Ontario. But they mined this, actually Inmet mined that mine in the 90s after about 10 years of production, but they closed it due to very low zinc prices at the time. I'm talking about around or under $800 per ton. Today, it's more than $3,600 per ton. So now that the zinc prices are high, we're looking at reopening the mine. There is some cautionary notes. I highly encourage everyone to read, as I might be doing some forward-looking statements. So our project is basically at the development stage of the Lassonde curve. We acquired this asset from an Australian company called Superior Lake Resources. It's a listed Australian company who wanted a Canadian team to build this mine at the time. And with COVID, it was getting even more difficult to run from Australia. So it started as a conversation as a joint venture team or deal, but we made this deal in 2020, and we closed the deal in April 2021 due to a lot of paperwork and started trading in April. And with that, they became our biggest shareholder because we acquired the asset by giving equity to them. So roughly right now they own 65% of Metallum, and the shares are in escrow. So about 130 million shares are held in escrow. And 15%, including management, myself as well as Sprott group of companies, 15%. So only 20% is under retail investors. So 80% is tightly held. But what's interesting is the Australians did publish a feasibility study under Australian standards, which we weren't really able to refer to because Canadian exchange didn't allow us to use the numbers. They consider it as historic. So we basically last year updated that feasibility study with the current cost numbers and under Canadian standards so that I can refer to it. I can take it as a base and we can move forward. So the feasibility study outlines, despite the increase in cost, very robust economics and how attractive this project is. Actually, it is one of the lowest cost quartile zinc producer because of exceptionally high grade ore. It is the highest grade zinc development project out there right now. Basically, the remaining ore is, we published the 43-101 resource last year. The remaining ore is 2.3 million tons at 18% zinc, 1% copper, and some good precious metals. Zinc prices have been going up under the radar in the last year and a half. But everybody likes gold, so when we convert it into gold equivalents, that resource is actually 13 grams per ton at 1 million ounces. So it is very high grade any way you look at it. But feasibility study also outlined after tax, all-in sustaining cost of 41 cents per pound. Today, zinc price is $1.65 per pound. It's more than 4 times this. This all-in sustaining cost is actually what it is the break-even number. So we have a lot of room for zinc prices volatility that we can still operate at profit. It will basically generate $95 million Canadian per year over the life of mine, which currently sits at 9 years. So zinc market is going up partly because European smelters started to close in October, but the demand is growing. And with all the infrastructure spending that the governments are introducing, including the United States, that means zinc. Again, it's not getting the spotlight that other metals are getting, but if you look at the demand and how low the stocks are around the world, it's incredible. This is the time for zinc, and Metallum is very well positioned to provide high quality concentrate for the years to come. So what is the opportunity here? Out of 117 development assets with over 5% zinc worldwide, most of them are in high-risk jurisdictions. We eliminated those, and then we looked at only the good grade ones, high-grade ones, and then looked at the volume. So 400,000 tons, and which are over 7% zinc. That only gives us 5 assets in the world. I don't want to go in detail on this chart, but out of 5 these companies, I want to point out the market cap difference. 4 of these 5 are multi-billion-dollar companies given the asset quality. Metallum is, we correlated in US dollars at around $12-13 million. So the upside potential is enormous just by looking at that. But what's interesting is just by looking at this, you can tell there will be a shortage of sustainable, good delivery of zinc in the years to come. Only 5, it's incredible. But also look at the zinc grade. Ours has this highest zinc grade, lowest market cap, lowest Capex, and possibly the highest return on giving the market cap. So when they mined in the 90s, the grade was so high that they had to actually dilute the ore in order to process it on surface. So they basically mined over 900 million pounds of zinc, 55 million pounds of copper, 1 million ounces of silver, and 51,000 ounces of gold. This is equivalent of $1.9 billion today's numbers, mostly coming from zinc. But let's talk about the feasibility study numbers. We based this on per 1,000 tons per day production, which will give us basically 33,400 tons per year and 1,300 tons per year copper as well. So what's interesting is the cost that we talked about, but the cash cost, direct cash cost is 35 cents per pound. And initial Capex is low, $116 million, because of all the infrastructure in there, which I will show you in the next slide. Very, very rapid payback. It's 3 years, but we are looking at shortening that, which I will talk about in the next few slides. The after-tax net present value at 8% discount is $253 million, with IRR at 35% after tax. Usually, it's considered as 15% or more are good projects. We're talking about 35%. So it's incredible numbers. So the infrastructure, other than the ones that I showed on the first slide, we have 20 kilometers well-maintained road from main Trans-Canada Highway that connects east to west, 20 kilometers off of that highway, right to the main mine gate. There's 16 kilometers underground development right to the ore. We just need to dewater it, put the mill, and start producing. So it's located just east of Thunder Bay and 150 kilometers east of Thunder Bay along the Trans-Canada Highway. But there is also railway station in town of Schreiber, which is 27 kilometers from the mine gate, which we can use, that will connect us to smelters along the way, east as well as west, or to south in the US. But also we can, if we wanted to, we can ship from Port of Thunder Bay to Europe or from Vancouver to China easily. The concentrate is also very clean, free from deleterious materials, and the recoveries that the studies that were done in 2019 are in line with the historic production. So it's very consistent. Because of all these, actually, metal traders, mine developers, and financiers are already approached us, and we are in the early stages of discussions. So we will leverage these advantages, and with small capital investments, we'll get to short time frame to production. We have various permits in place, and some of the major ones we are in the works. Right now, we are working to get the dewatering permit as the underground workings are flooded. We are looking at starting to dewater this summer. We should have no problems obtaining the permit by April or worst case May, and there's nothing else that is stopping us to start dewatering in June. Those will be the main ideas that we have for this year. But what is interesting is the Winston side is on patented land, which means that the permitting is easier and shorter time frame. Since the First Nations are supporting us and we have really good support from them, this shouldn't cause any issues. But what we can do with this dewatering permit is, once we dewater, we need to go underground, which means that we are either going to use the existing shaft or we're going to drive a decline, which we are looking at. So once we dewater this summer, we can start that and break into the high-grade zone shorter than the feasibility study outlines it. That will enable us to early access to the high-grade zone, which will cut our payback period from 2.5 years to 1.5 years, which is exceptional. So we are going to do that. So while we are doing that, we're going to have to use our ESG principles. So far, we have been only using First Nations and local affiliated or directly owned companies for water monitoring. In fact, I have this meeting this morning with the First Nations groups. We are going to increase our monitoring and on the environmental side, so that we can have track records of everything we do. But also we are looking at electric fleet and some other forms of environmental initiatives. So being in Ontario, even if we go down the route during production of carbon credits, we have the advantage of having 96% of electricity in Ontario coming from non-carbon emitting sources. So that even if we are not doing anything and buying carbon credits, that will not increase our cost significantly. So we will start tracking these this year so we can move forward. Sorry. What is also interesting here is the upside potential. As the previous presenter mentioned, mines are depleting work. They go down in resource, but the upside potential of increase the mine life and the resource is incredible. No exploration was done since they stopped mining, and minimal prior to that. On the left-hand side, you see there's 2 horizons discovered to date. Light colored ones are the ones that mined out, and the solid ones are the known resource. But the dashed areas are the immediate targets. And what's interesting is VMS deposits such as ours come in multiple, usually 4 to 6 pods like this. There's only 2 that were discovered to date, and they're in different ages. So on the right-hand side, on the left side, still you see also the underground development that are in solid lines. But on the right-hand side, the plan view showing the immediate surface exploration that have the high potential. So we are looking at increasing the mine life 2 to 3 years with very minimal effort of exploration. So what to expect? We are starting to raise $3 to $4 million to finish all the work and start dewatering, actually finish the dewatering and do detailed engineering work for production. We already found a potentially used mill to put on. And we're looking at listing on the OTC. So there is some interest from the US, so that makes it easier for them. A couple of research coverage reports are coming out this month. And on the operational side, just to recap, we have the dewatering permit and we will start dewatering this summer, and then we can go underground and drive the decline or rehab the shaft. And on the exploration side, after that, we can look into expanding the reserves, but our main focus is to open the mine. So just to recap, Metallum has one of the highest grade zinc projects in the world and definitely most advanced in North America. Very safe jurisdiction. The product is highly desirable from traders and smelters point of view. In fact, metal traders already in the talks with us, as well as some debt providers and mine developers. And the exploration upside to increase the mine life to 2 to 3 years in the short term is very, very high. And the valuation discount is one of the best at this time. And also I wanted to touch base, I know we're running out of time, but we have the team that has done this before, apart from Simon Ridgway, who founded Fortuna Silver Mines and developed it. We have great geology team. We have Mark Cruz. Mark Cruz built Trevally Mining from nothing to being one of the top 10 zinc producers with $1.5 billion market cap. And David Lang built mines as well. So we have the team to bring the shareholder value and build this mine. I'm always available to discuss further. And lastly, Happy New Year. I hope this year brings health, better health and prosperity, and hopefully Metallum can be part of that.
Thank you, Karen, from the kind greeting here. So just quick questions here. The first one coming from Evan. Do you foresee any issues in the permitting process here?
No, that's a great question. So since we started, we have been doing work towards that. One of the main things, obviously, the advantage we have is this is a historic mine, and it's an underground mine, and we are going to keep it that way. So even when we start producing, there will be zero disturbance on the ground. So we're not adding anything. So that makes it easy. We've built very good relationship with the First Nations since day one. They are extremely supportive. I had a meeting this morning again. That makes it easy as well. So we do not see that any issues on the permitting. So far, we have done a couple of permits already with the ministry, and the next one is going very well. We're in talks with the ministry constantly also.
Okay, the next one coming from Tiana Chan here is, what do you think of the zinc's outlook this year or next? Is there enough zinc in the supply side?
Yeah, that's a good question as well. I'm constantly trying to get that information as well. It's been last year very difficult to predict, but I've been talking to Wood Mackenzie and CRU and some other analysts. I've got recent information on the outlook for this year. Last year, I was in actually London on the LME week and had in-person discussions in regards to zinc and copper outlook. They were predicting back then 10 to 15% increase on zinc price this year, 10% the following. But 5 to 7 years, it's predicted to be in deficit so that the price will go up. Not only that's apart from COVID related impact, but because of all the COVID is, doing interruptions. There's stimulus packages, which means zinc, but electrification. Everybody talks about copper and lithium. Apart from all the infrastructure that is needed surrounding greenification economy around the world, that needs a lot of infrastructure, which means zinc. There's also zinc air batteries that is getting a lot of traction. They're non-toxic, they're easy to transport, they don't combust, and they're storing energy cheaply. State of New York just switched their energy storage to zinc air. Colorado, California, and I believe Arizona are doing pilot work in regards to that as well. So there's a lot of upside potential going on, and we are very excited. I think zinc has been going under the radar. Hopefully we can do this as we want and be the first runner on this.
Sure. Thank you, Karim. We're running out of time. I'll let you go. Thank you for your time here today.
Thank you very much for the opportunity.